China's stranglehold on critical minerals creates massive opportunity in these five stocks. Quick read. MP Materials, MP operates the only significant rare earth mine in North America. The company posted $56.6 million Q3 revenue with $41.8 million dollar net loss. Albemarle, ALB survived lithium prices falling from $80,000 to $10,000 per ton. Margins collapsed from 42% to 1.6%, but recovered to 14.8%. Lithium Americas LAC is developing Thacker Pass, the largest U.S. lithium deposit. The company posted a $197.7 million Q3 net loss despite General Motors investment. Have you read a new report shaking up retirement plans? Americans are answering these questions, and many are realizing they can retire earlier than expected. This article is by William Temple, published 8 hours ago. This post may contain links from our sponsors and affiliates, and Flywheel Publishing may receive compensation for actions taken through them. Okay, there's Caven Images, iStock via Getty Images. Oil built the 20th century. Rare earths and critical minerals is building the 21st. Every electric vehicle, wind turbine, solar panel, and guided missile depends on minerals one country controls. China dominates the majority of rare earth processing and lithium refining. That's not a supply chain, that's a geopolitical weapon. The energy transition is an optional. Neither is national security. The companies extracting lithium, neodymium, nickel, and copper are infrastructure for everything that comes next. Here are 5 stocks positioned to capture that demand, ranked by opportunity and risk. Rio Tinto ADR. Wow, it shot up real nice. Rio Tinto, Rio, isn't pure critical minerals play. It's a $180 billion mining conglomerate producing iron ore, aluminum, copper, and diamonds. While pure play lithium miners got crushed in 2024's price collapse, Rio's 19% profit margins held. The company generates $18 billion in EBITDA annually and pays a 4.3% dividend. That's a lot. Rio is developing the Rincon lithium project in Argentina and exploring rare earth deposits, but iron ore and copper involve ballast. Analysts target $87, implying 12% upside. A beta of 0.58 means it moves half as much as the market. Revenue hit $53.7 billion in the trailing 12 months with a forward P/E of 13 times. Next earnings, February 23rd, 2026. 4. Vale, Brazilian scale with nickel and copper exposure. Okay, it's very typical shut-up graph. Vale produces nickel and copper alongside iron ore. EV batteries need nickel. Electrification needs copper. Vale's $69 billion market cap delivers diversified critical minerals exposure at a 14% profit margin and 17% dividend yield. Wow, there's a lot. Q3 2025 revenue hit $10.4 billion, up 7% year over year. Net income was $2.68 billion. Operating cash flow was $2.59 billion. The risk, the 2019 Brumadinho Dam disaster killed 270 people and cost billions in fines. That legacy hangs over the stock, but you are getting critical minerals exposure with a dividend that pays you to wait. Earnings February 23rd, 2026. 3. Lithium Americas, their highest risk, highest reward bet. Okay, so it's pretty rough, icy photograph. Lithium Americas isn't producing anything yet. It's developing Thacker Pass in Nevada, the largest lithium deposit in the United States. General Motors invested. The government is supportive. The stock has a beta of 3.5, meaning it moves 3.5 times faster than the market. This is a binary bet. If Thacker Pass clears permitting and reaches production, Lithium Americas captures the U.S. onshoring wave. If not, or lithium prices stay depressed, the $1.95 billion market cap evaporates. Q3 2025 showed $3.1 million revenue and $197.7 million net loss. The company has $385 million in cash and is burning it on development. Analysts target $6.39, mostly hold ratings. But the mostly hold ratings. But the stock is up 103% over the past year. LEC. The Albemarle surviving the lithium crash. Albemarle, ALB, is the largest lithium producer on Earth. It just survived the worst lithium crash in history. Lithium carbonate hit $80,000 per ton in 2022. By 2024, it was $10,000. Albemarle's gross margins collapsed from 42% in 2022 to 1.6% in 2024. Root's revenue fell 44% to $5.4 billion. The company posted a $1.2 billion loss. But 2025 is showing recovery. Q2 2025 gross margins hit 14.8% and the company returned to profitability. Q3 margins compressed to 9% and operating losses resumed at $270 million, but the trajectory is improving. Albemarle cut SG&A by 29%, and $22 billion market cap pays a 0.86% dividend, very low. Analysts see $79 upside. The stock is up 115% over the past year. Earnings February 11th, 2026. Number 1, MP Materials, the only U.S. rare earth producer at scale. MP Materials core, $63.29. MP Materials operates Mountain Pass in California, the only significant rare earth mine in North America. That gives it national security premium pricing. The Pentagon needs rare earths for F-35 fighters and missile systems. Wind turbines need neodymium magnets. MP is the only domestic supplier. The problem? Profitability collapsed. Q3 2025 revenue was $53.6 million with $41.8 million net loss. Gross margins have been negative or near zero for 7 consecutive quarters. The company is selling rare earths below cost. Operating margins hit negative 108%, but the stock is up 225% over the past year to $69.58, trading at 53 times sales. Why? Investors are pricing in vertical integration and defense contracts, not current earnings. Insider activity is concerning. CEO James Litinsky sold 1.1 million shares over the past 3 months, including 272,600 shares in early January. But 14 of 14 analysts rated buy or strong buy with a $79 target. The bet, if MP can integrate downstream processing and lock in defense contracts, margins recover. If rare earth prices stay depressed and integration delays, the stock crashes. The verdict, which miner wins? MP Materials offers the purest rare earth exposure with the highest risk. Albemarle is the lithium recovery play if prices have bottomed. Lithium Americas is the speculative bet on U.S. independence. Vale and Rio Tinto provide diversified, low volatility exposure with dividends. The energy transition is real. The geopolitical tension is real. The question is whether these miners can execute before the next commodity crash. Wow. So which one should I buy? Not MP Materials because it's too high. And Albemarle, too high. LEC looks okay because I have $7. Vale looks tempting. Rio, too high. So I'll buy Lithium America, LEC. Thanks for listening. Have a great Monday. Bye-bye.